Hey everybody, welcome to today's play call. I've got some big stuff to divulge that is going to blow your mind. All right, we're going to talk a little bit about CPI data and why everyone's telling you out there that it's going to continue to drop. I am here to break the news that it's actually going to start to go up. What does this mean? Well, it means inflation is going to start to rise again. This is going to make it very hard for the Fed to not only be dovish, they'll likely be more hawkish, but ultimately it's going to make it so they cannot cut interest rates. And that is going to be very critical when the economy starts to stutter later this year and potentially going into recession. Because remember, the playbook for the Fed is recession comes for the US economy, they lower rates and print money. Well, that worked when inflation was under 2%. With 3% inflation and inflation now starting to uptick, almost impossible for them to do. So let's take a look at the chart. Here's inflation. Here's where food inflation is. Notice it's higher than regular inflation. Here's energy. Energy has dropped. This is as of the last CPI data. So energy collapsed over the last CPI data. And again, this is going back for the last year. So this is the kicker. If energy starts to rally, inflation is going to move up. Well, let's take a look at some charts. So let's go right in here. This is oil, guys. So check this out, right? So this is oil. Look at the run. In the last month, this is where the last CPI data came out. The last month, oil is up 10 to 15%. 10 to 15% just in 1 month. Think about what that's going to do for the month-over-month CPI. And then you go back towards a year ago, and we're getting close to the same levels, which means inflation is not going to continue to drop. Now let's take another chart here. I want to go back to my main viewer here. Let's look at this one. This is gasoline. Look at the run in gasoline, up 15 to 20% in the last month. Okay, 15 to 20% in the last month. And look at this, basically at 52-week highs. If you go back to June and July of last year, we were right here. We're basically right back to that. That is telling you inflation is going to move to the upside or at least stall here at 3%. Lastly, I've got to show you this, guys. We talk about food, right? Food being a key component. We saw inflation in food was still positive versus oil and energy was negative. Look at this. This is the DBA, which is an ETF that tracks agriculture. So wheat, corn, all of that stuff. It's at 52-week highs, up significantly in the last month. And again, year over year, we're at 52-week highs. So inflation is coming back. And this makes it almost impossible for the Fed to be dovish, let alone cut rates when the economy gets into issues. Everyone who's telling you that CPI, that consumer price index, is going back or inflation's going back 2% or sub in the near future is BSing you. I'm telling you right now, guys, I am telling you right now that CPI is going to be stagnant and sticky at 3%, and it likely will uptick a little bit in the next CPI report. You heard it here first at verifiedinvesting.com. My name is Gareth Soloway. I'm breaking it down, keeping it real for you guys. Have a wonderful day. Take care.